Welcome back in. Did Dominic just drop another AI video for the Internet Computer Protocol? Yes, he did. And it has a lot of new information and a new demo of the upgrade that ICP has now gotten. But among all of this amazing stuff going on with Internet Computer Protocol, they're still being excluded as an AI blockchain. And we're going to be discussing that in today's video, along with Avalanche tripling down on meme coins, the vision for USDC. And we're also going to explore some of the Bitcoin mining stocks, because I actually think that there is more opportunity potentially in Bitcoin mining stocks than some cryptocurrencies. And I'm going to show you guys the charts, and we're going to discuss that a little bit further in today's video. So make sure you guys are subscribed to the channel. That way you never miss a new video. We upload every single day of the year since 2018 to bring you the latest happening in the financial world. So do me a favor, give the video a thumbs up, hit the subscribe button. If you want to help support the channel financially, click the join button down below to learn more about becoming a channel member. Anyway, so yeah, we're hearing about Bitcoin runes, which are basically Bitcoin like ordinals that are arriving after the halving on the Bitcoin blockchain. And we're also hearing that ICP is going to be able to support them through these threshold schnorr integration. And we've covered this in other videos. Those videos are probably out already, so make sure you guys check those out if you haven't already seen them. But effectively, ICP is becoming the layer 2 for Bitcoin, effectively bringing smart contract functionality to the Bitcoin network, bridgeability, and a lot of management of any Bitcoin smart contracts or Bitcoin funds through the Internet Computer. And we also know that Internet Computer is also well positioned for AI. I'm going to show you guys this video in just a minute here. But there's a few things that I just don't fully understand just yet. If you go to CoinMarketCap and you click on the AI category for artificial intelligence, I believe Internet Computer should be here, because Internet Computer is a cloud compute type of blockchain. It has AI capabilities already deployed, and we're about to see the upgrades that it recently got. And meanwhile, we don't see Internet Computer here when you click on AI. The first protocol is the Near protocol, where it should be Internet Computer, because Internet Computer can do effectively the same, if not more, than what Near protocol can do. In fact, Near protocol recently effectively copied the technology of chain key signatures, which is similar to what we were just talking about, of this integration with runes. And the reason I brought this integration with runes up is because CoinMarketCap also posted this on X, showing the Bitcoin runes ecosystem. And you can see here that they have marketplaces, wallets, data and tooling, launch and mint pads, pre-rune tokens, and then DeFi. You guys can't see that. Now you can. And effectively, in my analysis of what Internet Computer's chain fusion, chain key, Schnorr signature technology, all of these technologies are very similar in terms of the interoperability piece, that they connect Internet Computer to other blockchains to be able to do many different types of transactions, whether they're financial transaction, contract transactions, or whatever. And meanwhile, for some reason, it seems CoinMarketCap is just excluding Internet Computer from all of this, all of the Bitcoin runes ecosystem, where Internet Computer should definitely be there, as well as from the AI category. Why is Near protocol in the AI category before Internet Computer is, when Near protocol is literally using Internet Computer's chain key technology that they were first to implement? And by the way, I just did a recent video on Render. It's called Exploring Render. Is this a millionaire maker? I think was the thumbnail. And in that video, we discussed that a lot of people have been reaching out and saying, it seems like Render protocol is a competitor to Internet Computer. And to me, it doesn't seem that way, because the abilities of the Internet Computer, as we've covered on this channel, seem to be way more vast currently. And also with the technologies that they're working on developing and deploying, which seem to be happening on a very rapid basis. Internet Computer is there. And so to prove that Internet Computer is not only compatible with Bitcoin runes, we're also going to show you that that Internet Computer effectively is already in production of AI compute. So this is the second video in Dominic and Dfinity's series about the AI smart contracts that run on the internet computer blockchain. And so we're going to read through his tweet, then we're going to watch the video, and I'm going to explain, in my view, why this is extremely, extremely bullish. I mean, if I haven't already done it. But most of you guys do watch these videos on a regular basis, so make sure you guys are subscribed to the channel. Give the video a free thumbs up. And so Dominic says, say hello to a massive acceleration of AI smart contracts on the internet computer blockchain. Brilliant work by the Dfinity team. Dfinity is the development company that is really behind the internet computer so far. They've accelerated deterministic floating point instructions by 10x, effectively bringing the compute power of the internet computer's AI by 10x. That's a huge increase. We continue on our mission to run sophisticated large language models as smart contracts, he says. Dominic said, in the demo, image classification is now running 3 times or faster across 3 to 4 blocks through consensus compared to 10 to 12 before. Naturally, the gas and cycles cost of AI inference has come down commensurately. The acceleration has achieved through broad low-level work, which includes commits to the public WebAssembly time virtual machine implementation of WebAssembly or WASM. Coming optimizations will take them much further. The next optimization will include the integration of SIMD instructions into the smart contract execution environment, which will allow multiple floating point calculations to be performed in parallel through the execution of a single instruction. Something crucial, he says, is also in the near sight is the migration of an internet computer smart contract environment from a 32-bit WebAssembly to a 64-bit WebAssembly, which will scale the number of AI model weights that can be loaded into contract memory from 2 billion to whatever is needed for sophisticated large language models. He says somewhat further away is the provision of new APIs allowing canister smart contract code to export AI computations for accelerated processing of GPUs. By the way, if this doesn't make sense to you, it probably doesn't make sense to a lot of people, but as I explain on a regular basis, right, a lot of the tech behind blockchain is very wordy and very complicated. But we're trying as investors and analysts to understand at a high level what is going on. Do we have to understand every single little detail? No. We have to have a general understanding of whether this technology, where it's going, is it capable of getting there, and what are the hurdles that they're going to have. Some of that is talent, some of that is money, some of that is time, some of that is compute power, all of these type of things that we have to think about. That way we can determine, is this a good or not good investment for our portfolio? At least that's the way that I look at it. Remember, nothing I say on this channel is financial advice. I could be wrong about anything and everything that we discuss. These are just my opinions, strategy, thesis, and I'm literally just reading somebody's tweet. So make sure you guys do your own research. But yeah, that's the kind of the way that I view these things. Like sometimes I'm reading some of these research papers or these tweets and I'm like, what are they talking about? But by the end of it, if I read it once or twice and I kind of understand the general gist of what they're talking about and where they're trying to go, I can make an educated decision whether this is a good or bad investment at that point. Anyway, he continues saying, this will require substantial work to address the challenges of achieving deterministic computation directly on the silicon and for the community to agree. A new public spec for node machines that pack GPUs and to add compliant blockchain nodes to that network. Together, these improvements will unlock further orders of magnitude acceleration of AI smart contract inference and potential training. He says, we believe that in the future, vast numbers of AI models will run as smart contracts, which will prevent them from being hacked and thus sensitive data they can ingest being stolen. Make them unstoppable, make them transparent, and where needed, allow them to run autonomously. For example, for purposes such as KYC or EVM smart contract verification or certification. He says, in the future, you will be able to have a conversation with a blockchain and ask it to do reasoning for you. In this bright future, on-chain AI will be at the heart of Web3 and the clear. And to be clear, the internet computer's chain key technology will allow direct, trustless integration with smart contracts on traditional chains such as Ethereum, Solana, and Near. Yes. Even though the Near protocol effectively copied the same technology from internet computer, this is actually a very good thing. And obviously, Dominic and the Dfinity team think about it this way, right? Although it's kind of, upsetting that they didn't even credit the Internet Computer, because they really should have. They should have said, Internet Computer has this running. They've already been testing it. They're the first to implement it in the blockchain space. And because it's working so well, right? Chain key technology, chain fusion technology on Internet Computer, that's why we're implementing it on Near. But instead, the Near protocol is more interested in the NVIDIA CEO touching the arm of the founder of the Near protocol. So anyway, you guys get it. I'm just joking around, by the way. Anyway, Dominic continues saying, join the ICP mission to run the most impactful AI models on the blockchain as smart contracts and help make the Internet Computer everything computer. Now, guys, I'm not trying to throw a jab here, but here's my opinion on this. If Cardano was able to do this kind of compute, I believe that probably they would be listed here, right? Because that's really all I'm going to say. I mean, the fact that, this channel, we pivoted more content towards Internet Computer, it's really kind of opened my eyes to the fact that ICP's technology is superior. I mean, it is literally superior to many of the top 50 blockchains. And I'm about to show you this second demo of the faster compute. And again, this was done, the 10x boost in speed for compute in just a few weeks, right? Other blockchains out here, they take years to implement things that other blockchains have had for years. And so when Dominic says, this is the real deal. I know some people are like, Cryptoviser, if you have to say it's the real deal, it's not really the real deal. That's bullshit. Because what other blockchain, okay? Tell me, Solana, Cardano, Ethereum, Polygon, Avalanche, tell me what other major blockchain in the top 50 can do all of the things that Internet Computer can already do. Bridge through chain key technology or chain fusion technology, whatever you want to call it. Already compute AI process on the blockchain, right? Store and essentially be like an Amazon Web Service cloud or Google Cloud, Microsoft Azure cloud for compute, for data storage, for cryptographic security of the information that is being processed by whatever application you're using. What other blockchain has this technology? None. Right? They're going, and the other thing is they can tap into all these other blockchains. So if Solana can do something better than Internet Computer, they can tap into those smart contracts to make it happen on Solana versus Internet Computer. Even though Internet Computer is the base layer blockchain that's doing all of the processing or execution of these smart contracts. Anyway, that's my analysis of it, right? And again, I'm an investor and an analyst. I'm not a tech person or a developer, and nobody's paying me. I've heard a lot of that as well. These videos, like, the only money that I get is from the AdSense and from the channel members, which, by the way, thank you so much to all the channel members. There's nobody paying me, right? These are my opinions and my thesis. And that's what I think is so special about this channel is this is not a shill channel. Anyway, let's listen to Dominic in this new demo from the Dfinity team. We're going to put this on 1.25 speed. One speed has just become too slow. Anyway, let's listen in.
Everybody, thanks for joining again. Today, I'm going to give you a second amazing demo of AI that's running as a smart contract on the Internet Computer blockchain. This time around, I'm incredibly excited to preview a huge boost in performance and commensurate reduction in gas costs that has been achieved by optimizing the processing of deterministic floating point instructions, which, of course, are essential to running AI on blockchain. Today, I'm proud to share with you that the Dfinity team has achieved a stunning 10x speed up in this processing through low-level optimizations. Okay, let's get started. We're going to race an...
Hold on, I want to pause this for 1 second. Notice what Dominic said, through low-level optimizations. This is not even medium or high-level optimizations, right? So this was like effectively Dominic and the Dfinity team saying, well, these were easy fixes. This was easy to get 10x. Okay, so where is it going to be when they can do medium level optimizations or high level optimizations? Obviously, these take a lot more time and a lot more testing, but bottom line is, what is that going to do when just a low level optimization is 10x boosting the compute power? Think about that. I think that makes it even more bullish, the fact that they're saying this is low level optimizations.
Okay, let's get started. We're going to race an optimized implementation of the network against what you see on mainnet today by classifying a picture of a Lamborghini, which of course is here by popular demand. So here we go.
Now, by the way, this potentially is a little like Easter egg from the Dfinity team. Maybe, and again, this is just speculation. So let's make that very clear. Maybe this is them kind of saying like, if you want that Lambo, this is the technology that's going to get you there. Now, again, I'm not telling you guys what to do. In fact, when I'm recording this video, I actually don't hold any ICP because I have traded in and out. Maybe that was a wrong move because we're just going to go straight up. I don't know. I mean, I think that overall the whole market is kind of going to go through kind of some kind of little corrective phase before we really start seeing price movements to the upside. But that could only be maybe a month or a few weeks. I don't know. But anyway, back to Dominic. I thought that was pretty funny. Let's listen in.
And boom, the optimized version is done, while the mainnet version is still going chugga chugga. Finally, it's caught up. So the 10x improvement in floating point performance has given us better than a 3x end-to-end improvement, and this is just the start. Our mission is to make it possible to run a sophisticated large language model as a smart contract, so you can have a conversation with the blockchain and have it reason for you. The kind of things that'll be possible with Llama 3. I want to extend my thanks to everyone whose work has made this possible so quickly, and of course, huge thanks for watching today. My tweet text has many more technical details. Please check them out. Until next time, bye for now.
So yeah, we did just check that. We read through this, and you guys saw how much faster this was, right? A 10x boost in the compute speed. So, I mean, there it is, guys. I am very bullish on Internet Computer this cycle. I think it's going to do extremely well. You know, whether it's a smart idea to trade it or not, I don't know. I really don't know. What I do think is a good potential trade is Bitcoin mining stocks. But before we go there, since we were talking a little bit about Cardano, people have been sending me this video of Raoul Pal saying that Cardano is a meme coin, and people are asking Cryptoviser, like, what is your take on this video? So let's listen to what he says.
But I'm not sure. I mean, I like the Yuga team. Let's see if they do anything. Okay. What are some of these other ones?
So Cardano, Solana, ETH competitor, you know Cardano.
Yeah, Cardano's a meme coin in my mind, because it's just not, it's you know, networks are valued by the number of people using it and the overall activity. It is like Doge. There's a huge network of retail, but really it hasn't got product market fit. I doubt it's going away either, regardless of what the market thinks. So I'll put it next to XRP.
Yeah, and I would agree with putting it next to XRP. I don't think XRP or Cardano are really going to perform this cycle, whether it's a meme coin or not, who knows? Like in classification, I don't think it really matters. But I think what Raoul Pal is saying is accurate, right? There is I don't even know how large the retail ecosystem is this cycle, but there is a larger ecosystem within Cardano. But again, the usage is just not there. And you see it in the metrics. That's not Cryptoviser saying this. Guys, go on the ADA dashboard and you will see accounts is down, usage is down, transaction per second is down, everything is down. So whether it's classified as a meme coin or not, I mean, I guess that's up to you. If you click on memes on CoinMarketCap, it's not there. But that doesn't mean anything because AI, we don't see Internet Computer there either. Anyway, moving on to the Bitcoin mining companies. So there's a lot happening. And as I've explained in my previous videos, I am very bullish on Bitcoin mining companies, especially now after the halving. Now, how bullish? Well, I mean, a lot of my non-crypto portfolio is Bitcoin mining companies. Am I going to trade them or hold them? I can't make that decision just yet. But I want you guys to see this, okay? What we're looking at is Marathon Digital. Marathon Digital is the largest Bitcoin mining company in the US, currently about a $4 to $5 billion market cap, right? It's the largest by market cap. But I want to zoom out and go back to 2020 during the last halving. Now, again, just because something happened during a previous cycle doesn't mean it's going to happen this cycle. But I want you guys to see that here we are in 2020. Let's go back to the pandemic. So this was in February when the market peaked in 2020. And then it went down for about a month until the middle of March when they shut down the global economy because of the pandemic. And that was basically the macro bottom. After the macro bottom, May was when the Bitcoin halving was in 2020. I think it was like May 11th or May 18th, something like that. And so you can see here, this was May, and the price of Marathon Digital was 45 cents, okay? 45 cents. And that was basically the low. I mean, it went a little bit lower, 40 cents, whatever. But either way, right before the halving was 45 cents. And then what you see is after the halving, we started going higher. We went to 95 cents about 1 month after the halving. So that's about doubling in price. And then in July, it started to make another move higher to about 450. So that's a 10x from May when the halving occurred in 2020 until August of 2020. So about 3 to 4 months, we had a 10x in the value. But it gets better because then we had a little bit of a correction and we were still higher than where we were before the halving. But then towards the end of 2020, you started to see the parabolic move to the upside. And by January, the price was $25 from 45 cents to $25 in about 8 months. And it doesn't end there. It kept going higher. In February, the price was $46. So that's a 100x in less than 1 year. And then if you go all the way to the top of the market, about 11 months after the halving in 2020 and 2021, the price hit a high of $56, $57, and then it came down. And I don't think it ever reached those highs again. So I don't know that we're going to hit these same numbers. I mean, obviously the market cap is much higher today than it was previously. Actually, yeah, in November of 2021, the Bitcoin mining stock went up to $81, which is basically 200x. If we do that math, 45 cents times 200. $90, yeah. So basically it was a 200x. That's a 20,000% increase in just one stock. Now, I'm not saying this is actually going to happen again, but we're seeing the setup. This is a perfect, what we would call a cup and a handle pattern. And granted, it has kind of followed through, but if you look at the multi-year and you zoom it out even further, I mean, we have still a huge way to go. And so I think over the next few months, we're going to see a lot of narrative moving to the Bitcoin mining companies. And this is a great opportunity, in my view, to look at some of the Bitcoin miners like Stronghold, SDIG. This stock just recently took a huge drop, a huge dip to its basically all-time record low at about $1.60. It dropped to the lowest at one point. And effectively over the last few months, we've seen the huge drop in this stock. And a lot of this has to do with the fact that Stronghold's CEO sold some of his stock and that made headlines, even though this is part of his compensation package. So this should, and it's being used to offset taxes. So this is not something that I'm as concerned about. There's also recently news that Stronghold is looking to offer $250 million in debt to basically fund an operation. And so when I look at the stock here, the market cap of the stock is $34 million. And so if they're trying to raise $250 million to expand their Bitcoin mining operation, I'm paying attention because that's basically 10x the market cap. And so just recently, the CEO of Stronghold Mining, Greg Beard, was on basically Anthony Pompliano's podcast. And he talked a little bit about the Bitcoin mining companies after the halving and how they're going to kind of adjust. And I thought it would be important and interesting to listen into what he says. Now, I'm playing this at 1.5 speed. Don't forget to give this video a free thumbs up. And by the way, this alpha about the Bitcoin mining stocks, I think is the best alpha I have on this channel. And again, I'm not saying this is financial advice. These are my opinions, strategies, thesis, and I could be wrong about anything and everything that we talk about. But there's very few other YouTubers that are talking about these Bitcoin mining companies and doing this analysis, comparing previous cycle to this cycle. And even if we do a fraction of that 200x, just a fraction, if we do 10% of that 200x, that's a 20x. Okay, so, and I'm talking about Marathon Digital. Marathon Digital right now is about $4.6 billion. Okay, so 4.6 billion, 20x that. Let's just do the math because you guys know I'm terrible at doing math. So $92 billion would be the market cap if we just did a 20x. Now, this is very possible. The largest Bitcoin mining company, depending on where the Bitcoin price goes, a lot of speculation, a lot of companies are going to probably start buying these Bitcoin mining stocks, putting them in mutual funds, index funds, and all this kind of stuff. That's a potential. And this is for a $4 billion market cap stock. Stronghold is $34 million. So to get to even 4 billion, it's 100x from here, or more than 100x, I should say. So anyway, let's listen to this part of the interview from the CEO of Stronghold Digital Mining on Anthony Pompliano's podcast.
Yeah. So, hey, we're different than most miners in that we own our own power assets and own our own data centers. So I think if you're, and we call that vertical integration. I think other miners will own their mining fleet, might own their data center, might not, but the vast majority, like maybe only one or two others own their power assets. And so if that's your circumstance, like your revenue is about to be cut in half, because that's what the halving means. The reward will go from 900 coins a day down to 450. Maybe we'll see a decrease in the number of people competing for those rewards. So we could see an increase in hash rate related to that. We have an aside on hash rate in a moment. But it really means you have two choices. One is you can upgrade your fleet by buying more efficient machines to get more hash rate out of your existing power supply, or you can try to drive your cost structure down as low as you can by lowering your cost of power. So there aren't that many variables. So it's really just two, as I said. So what we're thinking about.
So think about what he's saying. He's saying the Bitcoin mining companies can either increase their fleet with new machines or lower their costs, or do both. Right, but effectively, there's two strategies to be better at Bitcoin mining. There's really nothing else you can do. Like, you can't that's it. That's the only thing you could do to increase. And so Rob Chang, who is the CEO of Gryphon Mining, we've talked about Gryphon Mining a lot on this channel. And keep in mind, Gryphon Mining is similar to Stronghold because Gryphon Mining is a microcap stock as well, $52 million. Stronghold was like 34 million. So they're basically in the same spot. But the thing with Gryphon Mining is they are, according to the audits, 100% renewable energy. And so Rob Chang posted this right before the halving as well. He said the average cost to mine Bitcoin was at $70,000. Post halving, that implies a $140,000 Bitcoin cost on average. A focus on low cost matters. Gryphon Mining mined Bitcoin at $18,200 in 2023. So significantly under what the value of the Bitcoin was and is. Basically, that was right where the bottom of the market was, right? 15,000. So as long as we never go back there, Gryphon is going to be in profit where other mining machines are not, because they're mining Bitcoin at $70,000. And that was before the halving. Now we're after the halving, so it's a whole different story. But that goes back to what this CEO is telling Anthony Pompliano, that you can either increase your fleet or work on costs of energy. And we're seeing the energy situation really becoming a focus, because if Bitcoin miners can figure out how to get cheaper electricity to mine more Bitcoin, this could affect many other areas of the economy, and also the climate change situation, the concern with, dirty energy versus clean energy, et cetera. Let's listen in.
Is both. We're both working on ways to upgrade our fleet to make it more efficient, to get more hash rate out of our existing plugs. And then we are working on a variety of ways to drive down our cost of power. So in our model, we are in PJM. We own two plants in PJM.
Stronghold.
Interestingly, PJM has among the cheapest power for the next 2 years. So if the price of power is so low, which it is right now, that we can buy the power from the grid cheaper than we can make it, we'll shut our plants down and buy that power from the grid. In fact, it's cheaper than ERCOT for the next 2 years on average. So it's, we are positioned to be one of the lowest cost miners just based on grid pricing. If the cost of power is high, like so high, we can shut down the data center and sell power to the grid. So last year, I was quite proud of ourselves. We shut down the data center a few hundred times because the economic benefit to selling power to the grid was better than mining. And then everywhere in between, we generally will run the data centers and either have the plants running or not. So the ways we can drive the cost of power down in our space, one is we have a very interesting carbon capture project that we announced late last year. And that's really a result of, as a part of our process in making power, we are reclaiming waste that was left behind by hundreds of years of coal mining. it's the waste that was left on the surface is toxic. There are like 800 piles. I talked about this on the last time we met. And it turns out that because we have to add crushed limestone to the fuel mix to take out the sulfur emissions, that creates an ash that is beneficial use ash. So we can use it as fertilizer. It's non-toxic. It has in it calcium oxide, which acts as a sponge in pulling carbon dioxide from the environment to create calcium oxide. So by weight, we can capture just slightly more than 10% by weight of carbon from the air. So if we make 100 pounds of ash, we can capture 10 pounds of carbon dioxide through direct air capture as a result of the carbon sponge properties of the ash.
So you guys see, they're doing a lot of new things. They're testing a lot of new things, and this is going to affect a lot of different industries out there, not just the Bitcoin mining space, but this is an area to watch. And so we're going to continue to talk about on this channel Grid, which is another very, very low market cap Bitcoin mining stock, $1.06 when I'm recording this video, right around $50 million. And their CEO, I think, founder and CEO of Grid, said at Grid, we mined blocks with 12.5, 6.25, and now 3.125 subsidies, meaning how much the rewards are after the halving. Proud to do our part to support the Bitcoin along its path of progressive scarcity. TikTok next block. Time chain, don't stop. Little cheesy, a little cringy, but either way, bottom line is these Bitcoin mining companies, we're going to be watching very close because there's going to be a lot of money to be made. And I do think there's going to be a lot of millionaires made from this sector of the markets. Anyway, what are meme coins good for? Social signaling, says the Avalanche founder. We know that Avalanche just recently started buying meme coins from their own ecosystem. And now, speaking exclusively to Cointelegraph, the founder, right, the CEO of AVALANCHE, said they're great for the space, meme coins, because they bring people in, they keep them excited, occupied, and concentrated on what the technology can do. He said that many critics argue meme coins bring no value to the ecosystem, just as the rise of NFT had detractors. But he said there is value not tied to the prospect of making fortunes, but to attracting newcomers to the space. Now, I do agree with him in that realm, because the last cycle, I mean, I'm sure you guys remember the Dogecoin excitement when Elon Musk was going to go on Saturday Night Live. Everyone thought that Dogecoin was going to go to $1. It didn't, right? But everyone thought it was. There was a lot of excitement. That was when Shiba Inu, Floki Inu, Doji, Elon Mars, all these crazy coins came out. And I remember, people were calling me saying, Cryptoviser, like, I need to get my hands on, a bazillion Shiba Inu coins, and my account is locked because I bought too much. I'm like, okay, why are you buying this coin? Oh, because everyone's talking about it on TikTok. I'm like, okay, but why are you buying this coin? They're like, oh, because everyone's talking about it. I'm like, yeah, but why are you buying? They didn't get it. They didn't get it. And at the end of the day, that excitement, although it needs to be harnessed in, education and people understanding like how these markets work, not just I need to buy it because it's on TikTok, because obviously we know what happened to the price of Shiba Inu afterwards. I mean, we had a significant drop in the price, Dogecoin, Shiba Inu, and people also don't understand the tokenomics behind it, because the tokenomics behind Dogecoin is 5 billion new coins are printed every single year. Anyway, this CEO of AVALANCHE said, as someone who is very conservative financially and has been in the space for a very long time, he said he spent a fair bit of time criticizing Doge and Shiba Inu, but you realize after a while that the meme coins serve a purpose, and that purpose will not be obvious to boomers. Well, I would agree. He said, what is the purpose? The purpose is social signaling. In the same way that some people use a Bored Ape Yacht Club NFT as a profile picture, they're saying, I made so much money off trading that I can afford this. And this is true. I mean, it's the same thing as, think about this. Like the boomer generation, their view of like, making it is, having a nice car, wearing nice clothes. You guys know some people like, they make a little bit of money or they get a little raise at work and then they're going out and buying a Louis Vuitton bag. It's like you're making $2,000 extra per year and you just bought an $8,000 handbag. Like, how does that make sense, right? Or you just got a little raise at your job and now you're buying a $90,000 car. Like, how does that make sense? You know what I mean? Like, you're not making $90,000 more. You're not even making $30,000 more. And that's the difference between your old car price and your new car price, right? But people do this. And it's the same thing in this ecosystem, right? People like these badges. They want to own Shiba Inu. That way they can show it on their social media. It's the same thing like if you watch like celebrities, like if you guys watch, what's his name? Dave Portnoy and his food reviews. Like people will go up to him, but, oh, can I take a picture? And he'll be talking to them and they're not even listening. All they care about is their picture. It's like you're not even enjoying in the moment. And then you're posting like you just hung out with Dave Portnoy when you're not even like hearing what he's saying to you. Like he's trying to have a conversation and you just want your picture, right? So it's very similar. It's a social signaling type of deal. And I do think that meme coins do have a place. Guys, I hold meme coins. I'm going to trade meme coins. I don't think there's anything wrong with that. And Avalanche Foundation has now snapped up, this was about a month ago, Kimbo, Coke, we'll say Cock, and 3 other tokens as the first meme coin investment. Because as we've explained, Avalanche Foundation is going to even support their own meme coin ecosystem by buying the meme coins. And that's them social signaling as well. Anyway, this is a short video. I mean, it's a long video, but we're only going to play a short part of it, 1.5 speed. This is Jeremy Allaire, the CEO of Circle. And I want you guys to understand why USDC is so important in the crypto ecosystem, regardless of people who say, but Cryptoviser, you know, they can freeze coin. It's like, who cares? Who cares? This USDC is so important because it's transitioning the world to digital currency, number 1. Number 2, it's regulated. Number 3, it's the bridge between traditional finance and decentralized finance. And they're doing things the right way in terms of getting it done. All of these other stable coins, they just fail. They just do. And in my view, there's no reason to reinvent the wheel if you don't need to, right? Reinvent other things. Anyway, let's listen to what he says.
For context, some of this is obviously very familiar to everyone here, but the mental model that we use at Circle is that blockchain networks like Ethereum, like Solana, like these layered infrastructures that are being built up, these blockchain networks are essentially a new internet operating system layer. They're competitive with each other, but they provide infrastructure for provable data, for censorship-resistant data, for transactions on that data where people can transact directly between each other without intermediaries, and for compute. Deploying code that is also auditable, perfectly verifiable, cryptographically provable in its execution. These are major innovations that didn't exist on the internet, which now exist and are starting to exist at scale. So we have these new computing platforms. These blockchain networks are just now reaching maturity. But in particular, these blockchain networks, they're general purpose, right? They can be used for games, they can be used for social media, they can be used for identity, they can be used for a lot of things, but they're very, very well and purpose-built for financial applications. So we talk about this idea of the internet financial system, and this new internet financial system being powered by these blockchain networks. And when we look at the challenges and pain points and limitations that exist in the existing financial system, blockchain networks and the ability to build protocols and money systems on them overcome those. We're entering this world of always-on internet scale money, a world where transactions can move literally at the speed of data on the internet, where transactions can settle at a fraction of a cent, where the actual underlying infrastructure is constantly being upgraded, constantly being improved through open source communities and innovation, where any internet-connected device, any piece of software, hardware, any AI agent can connect to this, and transparent code that can execute. So huge, huge steps forward. So we think that, and we know that we're all part of building this new internet financial system. It's going to be a safer, more inclusive global financial system built on this technology. Open internet infrastructure, a full reserve model of digital currency, and ultimately more and more of finance, of commerce, of the entire global economic system being on-chain.
Now, that's where we're going to leave it, because I want you guys to understand, right? What he's talking about, what the biggest minds in the space and finance are talking about, is making this an interoperable ecosystem where everything connects to everything, where the best blockchains are going to succeed and they're going to do well. I was wrong about Solana. I've admitted that many times on this channel, right? Solana is going to do well because it has the venture capitalists and it has the big money interested to make sure that this gets implemented across all of finance, all of blockchain, all of Web3. That's why Solana is going to succeed. That's why Solana is succeeding. Is it going to have pullbacks? Yeah. But is it going to continue to succeed? I believe it will. It has USDC. It already has that layer. Ethereum has USDC, already has that layer. And USDC is very rapidly becoming the indicator of which chains are ready, which chains are going to be the top chains. And granted, right now I'm a big bull on ICP, but they don't have native USDC. And I know everyone's going to say Cryptoviser, they have chain fusion, you know, you can CK the USDC. No. I'm talking about Circle deploying that right on the blockchain. And until they do, that's still a concern that I have with Internet Computer, and Internet Computer cannot be on the same level from a financial integration standpoint as Solana and Ethereum and Polygon and CELO and all these other blockchains that have native USDC integration. Will there be at some point? I hope so. But we're going to have to wait and see. I mean, we've been waiting forever for Cardano, and we're at the point where Cardano either can do it or just doesn't give a and don't want it. In either one, it's not good for the Cardano ecosystem because they cannot tap into that liquidity from the traditional financial system, that it doesn't have the trust of the venture capitalist and the large-scale investors. And it's not from a regulatory compliance standpoint because it has no integration from a regulatorily compliant stablecoin like USDC, and that is a problem in my view. That's why it's not investable, at least at the current moment. Anyway, hopefully you guys enjoyed this kind of longer version video. We covered a lot in it. So let me know what you guys think down below in the comments. Don't forget to give the video a thumbs up, hit that subscribe button. That way you never miss a new video. And I'll see you guys tomorrow. Crypto on.